Good morning, good afternoon, good evening to wherever you are in the world. Welcome back to another episode of the Coffee Hour, where we go over a lot of market news, right? Market news that impacts not only stocks, but our portfolios, our lives, our money, everything else, right? So definitely a lot of news for Bitcoin today. So we're going to be covering Bitcoin. We do have some news on some spicy news, actually, on some execs getting charged by the FBI for exporting technology that they weren't supposed to one of the biggest rivals for America, which is China, right? Right now, there's an export ban. Well, you need an export license in order to get there, right? So anyways, I'll share my thoughts on that a little later. We'll be talking about gold, right? And the continued sell-off for gold and just some random market news. So I think this stream is probably going to be more Bitcoin focused. I have more news for Bitcoin than anything. So I'm going to try to breeze through a lot of that real quick, and then we'll check out some clips, from thoughts on some from some pundits on CNBC. So just checking out who we have in the chat. So we have Super Straight Guy. I am the first. Unfortunately, you are not, sir. You are not. Today it was Sergio getting my coffee right now. So, hey, Sergio. Hey, Super Straight Guy. Always a pleasure to have you guys join on these streams. All right. So shout out to the people who are watching on X and YouTube. And with that being said, let's get into it. All right. So, as always, appreciate you guys joining me for the stream. We're going to check out this heat map today. All right. It's looking very, very nasty. As you guys already know, I'm sure you guys have been getting your red light therapy. I've certainly been getting mine. We had kind of a little bounce. It was weird. When the market opened, the index was down like 2.2% for the day. I mean, that's pretty damn bad. I mean, it was pretty brutal. But it looks like it started to spike up throughout the rest of the day. So I was trying to look for news or some type of news catalyst that was, causing the market to come back, but I couldn't find anything. The VIX was at about 27. I haven't checked it, today, but the VIX was pretty high, and fear and greed was actually an extreme fear at the start of the market. As a matter of fact, let me get a sip of coffee real fast, and then we'll check those two things. I see we have Sith of Mordor saying my portfolio is giving me a red burn on my face every time I look at it. I'm just going to uninstall Robinhood. I'm tired of playing this game. I'm done with it. This is a stupid game. They're always cheating and hacking and making me lose. So I don't want to play anymore. But yes, I am definitely getting some third-degree burns myself. All right, let's check out what is happening on the VIX as well as the fear and greed. All right, so VIX ETF chart. We actually went down. That's it. That's interesting. So we were at 27. And it looks like we've been slowly climbing down, which would explain why the market, started to pump up a little bit throughout the day. And then for the fear and greed index, again, we were sitting at extreme fear at the market open, and it looks like we're still in extreme fear. So we're at 17 right now, and the VIX is actually coming down a bit. So that's actually kind of interesting. So let's take a look again at what's going on here. I just want to pop my head over into futures. It looks like for futures, we are looking green. So we might have a green day tomorrow for you guys. It'll be later today for me. So hoping we have a green day. Usually whenever there's sharp declines, there's, kind of a small relief rally. Don't get your hopes up high, guys. I still believe we're going to be going lower. Don't know how low, of course. People are calling, again for that 15% decline over time. And it definitely looks like that is starting to play out. All right. So S&P 500 down only 27 basis points for the day. You guys can see we had a nice little spike back up about 90 basis points, almost a full percent. And then you guys can see here over the last 5 days, it was down pretty bad. Like I said, pretty bad. It was down. So year to date down 3.67%. And you guys can kind of see from this very, very novice looking chart that there does seem to be a trend looking like it's starting to go south for the early spring, right? So we'll continue to monitor that and see what happens. Let's see what we got here. Let's see. So Super Straight Guy says the stream broke. I hope not. Maybe it's my internet. Maybe it could be your internet. Hopefully the stream does come back. If I can get a check, if anyone could put in the chat if everything is looking good. All right. So for IGV, all right, expanded tech sector software, it actually was up today, which is a little surprising, right? So it almost feels like people are selling gold which is down today 4%. That's huge. So gold is down 4%. Silver is actually down with another 4%. And it, you know, are they selling gold and silver and flocking into software? You know, that's kind of what it's looking like. We also had Bitcoin come back up, but Bitcoin was hovering at around 75,000 over the last couple of days. And then, you know, I had a very nice dramatic sell-off this week. Again, you know, the biggest things that are contributing to all of this, we have fears of recession coming back, right? That's starting to pop its nose up again. We also have, you know, of course, the conflict in the Middle East continuing with no off-ramp, no potential end in sight, right? Pete Hegseth, Secretary of War, as well as General Kane, who's, you know, running the show, you know, for the Joint Chief of Staff, if I'm not mistaken, gave an update tonight, basically explaining what is happening and, you know, kind of what the objectives are, and you know, kind of a status update on the war over there. So I am still thinking that we have weeks to go, and probably, like I said, maybe another month or two, because the Iranian government and who they are, they're not just going to roll over, even though a bunch of their, you know, top dogs, a bunch of their top government officials are getting iced. You know, that's the only way I could put it. I still think that this is going to continue. This uncertainty is going to continue for at least the next couple of weeks. All right. So anyways, moving on from that, right? So again, we have silver going down year to date, not doing so hot. Now it's down 11%, or excuse me, down 11 basis points. And it does look like there's going to be more room to go down. People are calling for $50 silver. So people who bought at the very absolute high, again, hold on for dear life, because it's going to be a rocky road down. Fundamentally, you have to remember, why did you get into silver? Okay, why did you buy silver? If you bought around here because you wanted hype and, you know, you thought silver was going to continue climbing up, you know, to $500 an ounce or something, well, you know, remember that conviction, right? Remember that conviction of why you bought silver. I'm still holding gold, even though gold has been kind of atrocious these last couple of days. I mean, look at that. You guys can see these big dips, right? Down almost 10%. For me, again, I'm just going to hold the gold position. I have a stop loss in case things get really bad. So on my gold position, I put a stop loss because I definitely don't want this thing going much lower. I'd rather keep some gains, but if I lose the gains, whatever, it's not, you know, I'm not going to cry over it. I'll pay a little bit of tax if I have to. So that's what we got for at least gold, silver, IGV, Bitcoin. All right. So let's see what else we got going on. So we have the dollar also doing really well, almost at 100, right? We're looking at the Dixie here. So over the last month, it's actually been climbing really well, right? It's been climbing. We had a little bit of a sell-off here. It reached, you know, $100 here and there. And I think that is also causing pressure, downward pressure on gold. Okay. Because gold is, you know, supposed to be this inflation hedge. You know, whenever there's a weak dollar, gold should do well, but that doesn't look like that's happening, right? It looks like, probably unironically, you know, the dollar is actually getting stronger when, you know, the Trump administration wants a weaker dollar. So I'm sure now that is another needle in the side there. Okay, so I want to say congratulations to everybody here on this stream, because we just passed $39 trillion in debt, right? The U.S. national debt surged past $39 trillion just 2 weeks into the war in Iran. We had the debt clock, or not the debt clock, excuse me. We had one of the websites, or actually two of the websites, put us at above $39 trillion, but it's been fluctuating up and down. And I think it's because of what, you know, is currently being requested. We have, I think I got rid of it. Oh, I totally got rid of it. There it is. We have Pete Hegseth requesting $200 billion for the Iran war. Okay. So again, congratulations, guys. The U.S. is spending money like it's going out of style. So anyways, there is a potential, he mentioned this during his press conference, for a $200 billion increase for Iran war spending. This is why, again, I still think that we're going to continue on for at least the next couple of weeks. Oil prices have been climbing like crazy. As a matter of fact, we could take a look at oil right now. Let's see. Actually, oil looks like it's coming down a bit. So crude oil Brent is still above 100. Crude oil WTI is hovering at about $92. Natural gas, yeah, earlier in the day this was all coming up. So I still have not seen any news on why this is coming down or the reason for this to come down, but I still think this is going to continue, right? Iran's not going to capitulate or anything or give in to demands. As a matter of fact, there are now refineries shutting down, and these refineries in the Middle East are declaring force majeure, which basically means, hey, it was outside of our control, so they're canceling contracts left and right, and that is definitely not good, right? That is definitely not good for the energy markets. So anyways, going back to this, Execs is requesting $200 billion to basically fund the Iran war. Currently, though, there is no plan to send troops on ground, right? So no boots on ground right now. Okay, at least that's what he's saying, but you know he could flip that in a moment's notice. And again, politics free channel. All right, I don't care what your politics are. We still have to read the news so we can understand what's going on in the broader world, because what's going on in the broader world impacts our portfolios, as you guys know, for those of you getting red light therapy like myself. All right, so Defense Secretary Pete Hegseth said Thursday the Pentagon's report $200 billion budget request for Iran war funding could move. President Donald Trump, National Economic Council Director Kevin Hassett, said the war has already cost $12 billion. All right, so that's almost $1 billion a day that they've been spending on strikes in Iran and defending the Gulf nations. All right, Hegseth also said our ungrateful allies in Europe should be thanking Trump shortly before some of them committed to help reopen the Strait of Hormuz. The Strait of Hormuz is what accounts for 20% of global shipping, right? So very, very important that they get that Strait of Hormuz open. All right, so this is more geopolitics type of stuff, but U.S. clears $16.5 billion in arms deals for Gulf allies as Iran conflict escalates. Some of the notables here that might benefit from this, some of the beneficiaries are going to be defense contractors. All right, companies like Raytheon, RTX, Northrop Grumman, and Lockheed Martin. Okay, just to name a few. But the U.S. Department of State has approved potential arms sales exceeding $16.5 billion to several Middle Eastern partners as tensions with Iran intensify. The largest package is aimed at the United Arab Emirates, totaling more than $8.4 billion in covering missiles, drones, radar systems, upgrades tied to the F-16 aircraft. Separate approvals include air and missile defense radar systems for Kuwait, valued at $8 billion, along with aircraft and munition support for Jordan, estimated at $70 million. So if you want to play on the defense, defense contractor, or play on the themes of war, here are some of those names you can take a look at. Okay, we have another one. Okay, Strait of Hormuz must be open in days, not weeks, to avoid a global recession. Remember, I said yesterday, and I believe I said it the day before, that if this continues, this nonsense continues, we're going to keep hearing this this recession word. All right, we're going to continue hearing this recession word, and you already have Goldman Sachs, Moody's, and now BofA, Bank of America, talking about recession risks, recession odds. We heard this way back in April when the tariffs were put in and this and that. And then, first it was Canada, then it was Canada and Mexico, then it was Canada, Mexico, and China, and then it was the whole world, right? And then it was just news after news after news of, recession odds improving, recession odds increasing. We reached like 55%, 60%, and then it all came, it all eventually calmed down after a while. But that word is still around. It's still starting to pop up. All right. So I'll just cover just a brief couple sentences here. In an interview with CNBC, Blanche emphasized that high energy prices and supply disruptions are creating significant risks of a global recession, with current estimates showing an 8 percentage point gap in global energy supply. Blanche identified two critical factors that must be addressed to prevent a global economic downturn: protecting critical energy infrastructure from further strikes and immediately opening the Strait of Hormuz. When I say quickly, I mean days, not weeks or months, Blanche said, underscoring the urgency of the situation. He noted that roughly 1 percentage point of energy is needed for every percentage point of global GDP, making the current supply gap particularly alarming. All right, we can see prices spiking over $200 a barrel as soon as the market believes that this can be a multi-month operation. He said, adding that without the return of disrupted supplies, very high prices will be necessary to continue rationing global demand. So the United States is currently working with the oil industry to ferry ships across the Strait of Hormuz, right? That is what is currently happening. Okay, so some global shipping is happening. You have Iran that's talking about turning that Strait of Hormuz into a toll, basically, right? Into a toll. Ships can pass through, but they need to drop a little bit of this off the side, right? And there are reports, I guess, that I've heard about where shipping, ships are passing to and from the Strait of Hormuz, but they had to pay some type of a toll, dropping something over the starboard, right? Over their ship, right? And then the Iranians would come pick that money up or whatever it is, right? But yes, that is happening. That's what they are contemplating right now. That's what they are doing. And the U.S. is obviously trying to figure a way around this. You had Israel strike a gas field that was very, very important to Iran. And in return, in kind, Iran struck a bunch of refineries and energy infrastructures in Qatar, Bahrain, Saudi Arabia. And, that's obviously not good, right? That's obviously not good for the markets, like we've been saying this entire time. So it's still a continuing fluid, scenario that's playing out or event that is playing out. And you have both sides that they're trying to, not hit energy infrastructures, right? Trump has told Israel, stop striking energy infrastructure. And, the Gulf Coast, the Gulf nations, they're pretty pissed. They're not happy that their energy, infrastructure is getting hit because that's how they make their bread and butter. That's how they make their money. Iran knows this, and Iran keeps striking it. So at some point, they're going to stop. They're going to say, hey, let's just keep the energy out of this. Let's just keep the energy out of this. Let's continue the war, and we'll see what happens later, right? War is a funny thing. War is absolutely a funny thing. Anyways, let's see. We're going to get into Bitcoin here in just a moment. From Sitha Mordor, he says, it's my fault Bitcoin is down again. As soon as I bought some BTCI, it went down. I take full responsibility. Sorry for whoever has Bitcoin ETFs. I will announce when I make my next big buy in Bitcoin. I'll do it the day before. Well, actually, I won't be able to do that because I usually buy it on a whim. But I will make an announcement, at least in the Discord, that I'm about to buy. So get your money ready, because as soon as I buy Bitcoin, we'll see Bitcoin sell off. So don't worry, I have the same luck as you, or the same curse. So anyways, Moody's I'm not going to read this article, but again, this is just another recession, thing coming out. Moody's says the U.S. recession is increasingly hard to avoid amid the Iran war. I'm not going to go too far into it, but one of the things they noted was U.S. labor market fragility fuels recession fears, at least for the United States. Weak employment is a single biggest factor pushing up the U.S. recession odds, according to Zandi. Employment in February fell and has gone more or less sideways for the past year. Employment is the best measure of coincident economic activity, the economists explain, while also pointing to the other soft signals, such as a decline in residential building permits and consumer sentiment. And we already seen that with, the housing market taking a beating. There's pretty much no new inventory coming on, right? Builders are hard pressed to build anything because the interest rates are still so high. Getting, money to build this stuff, you can't just get free money to build it, right? Also, there is a section, there is not sector. I'm losing the word here, but anyways, there is a sect of people who actually pay these builders to buy or to build homes, and those people are not paying, right? They're not paying. Usually it's fueled by some type of debt. Debt markets are still pretty expensive. So you have that. You have people who are not buying homes either, right? They're not buying homes. The interest rate is still too high, so no new mortgages. There's been reports of a lot of houses that were under contract end up getting the contract canceled because they can't get a mortgage, right? They can't qualify for a mortgage. What people were able to qualify for last year, they can't qualify for this year. So again, that is still a big deal. That is still happening. So housing is still very weak, and people are downsizing. Right, cost of everything was going up for quite a while. People were downsizing. Maybe you don't need this $500,000 home for two people. Maybe you just need an apartment, right? Maybe you need an apartment that's, $1,000 a month, if that, right? If you could even find something like that. But yes, that stuff is still true. All right. Especially in these high cost of living areas where all the jobs are. Maybe, rent is definitely not $1,000 in some of these places. I've seen them as high as like $3,000 for a single bedroom. Anyways, beside the point. 16 out of the last 19 job reports by the U.S. Bureau of Labor Statistics, or the BLS, had downward revisions shortly after being released, the highest amount since 2008. Again, just another signal here, another indicator. When asked about the statistic and the apparent unreliability of U.S. job market data, Zandy noted that, if anything, it suggests the job market is even weaker and recession risks are even higher than the current data shows. All right. However, Moody's chief economist added that the important caveat is if the job markets were to somehow able to hold its own, I don't think higher inflation alone would be sufficient to push the U.S. economy into recession. All right. So Zandy specified that if the rising energy costs due to the war in Iran, paired with the declining job market, as BLS data suggests, could ultimately cause a weakening in consumer spending, which in turn causes businesses to pull back and lay off workers, ultimately igniting a reinforcing negative cycle. All right. So, think about just the average U.S. person. Think about yourself. If energy costs are going through the roof, right, you're going to have to choose between gas for your car and electricity for your house, right? Especially in the summertime, or even now in the wintertime, you're going to have to decide AC, heat, or going out and spending money, right? Spending money at Target, spending money at Costco, spending money at, retail, outlets, buying clothes, food, restaurants, movie theaters, all that stuff, right? You're going to have to make those decisions. So I could see, and we kind of covered this as well, when, the price of oil spikes up, that's what ends up leading to inflation. The cost of goods and services get more expensive, right? It's going to cost more to ship food across. It's going to cost more money to farm, land. It's going to cost more for everything, right? When energy costs go up. And that's exactly what we're starting to see. All right. So going back to the Strait of Hormuz, right? And I'm going to finish off this geopolitics segment. We're going to get into the Bitcoin segment. Okay. So why I think this whole, why this thing is going to continue at least for the next couple of weeks, if not at least the next month and a half, is because of this right here. So just for people, general education, things like that, because I did not fully understand this at first, some time ago. But we saw this happen under the Obama administration, and they brought up the War Powers Resolution. That was the first time I heard of it. But this is it, right? The War Powers Resolution of 1973, also known as the War Powers Act, mandates that a U.S. president must obtain congressional approval either through a declaration of war or specific authorization for the use of military force, right? If a military campaign is continued beyond a specific time frame, typically understood as 60 to 90 days. All right, so the 60 to 90 days is the most important rule here. All right, so within 60 to 90 days, this is pretty much when the administration needs to have this, wrapped up, this conflict wrapped up, right? After that, that's when it's going to get extremely political, right? From a domestic politics point of view, that's when it's going to get extremely political. This is why I think, this campaign, whatever you want to call it, because it's not officially a war, but this campaign or this conflict is going to last at least, for the next couple of weeks, right? So I just wanted to put that out there for any aficionados out there that like to follow this type of stuff. Okay, so now we're going to move on to the Bitcoin stuff. I just want to check out the chat and see what we got going on. Yeah, I'm not going to post that comment, Super Straight Guy. Let's see what we have here. Okay, we should be good here. Okay, so moving on. So quick shout out to the 61 viewers on X and to the 31 viewers on YouTube. Appreciate you guys joining me on this stream. All right, let's move on. So here's some big news from Morgan Stanley. They're getting closer and closer to launching their own Bitcoin ETF that's going to be competing with Grayscale's BTC as well as BlackRock's IBIT. Okay, so Morgan Stanley prepares Bitcoin ETF for the New York Stock Exchange ARCA launch, picking MSBT as the ticker. Morgan Stanley updated its Bitcoin ETF S1 filing, adding Fidelity as a custodian and revealing the new ticker. So they're getting one step closer. That was pretty much the big news for this. But I also wanted to point this out. Earlier this month, Morgan Stanley said that the Bank of New York Mellon and Coinbase, custody trust company, would custody the fund's assets, with Fidelity now joining that list of custodians. So FBTC, which is the IBIT version for Fidelity, or it's basically a Bitcoin trust, right? For Fidelity. Fidelity actually custodians its own Bitcoin, whereas IBIT, from BlackRock, they use Coinbase and a couple others. So now we see Morgan Stanley coming out with their own Bitcoin, trust, their own Bitcoin ETF, and they're going to be using a couple different custodians as well. So why is this a big deal? Why is Morgan Stanley coming out with a Bitcoin ETF such a big deal? Because we have not seen the institutions, the large wealth managers start to recommend Bitcoin allocations yet. We have not seen that. All right. You hear here and there whispers, you hear rumor here and there. You might see an article, you might see a headline, here and there, but really they have not started recommending Bitcoin to their clients yet. Now, again, from the book Bitcoin 1 Million, there was an interesting thought that if these institutions start to, go to their wealth management firms and tell them to start pushing IBIT or start pushing FBTC or, Bitcoin to their client list, even a 1% allocation in people's portfolios would be massive inflows for Bitcoin itself, right? Never mind the ETF, but it would be massive Bitcoin inflows, right? So that is still to come. That will be coming at some point in the future. And of course, if that does happen, you can probably surmise from that Bitcoin's price is going to go up, right? So more to come, right? But here's something else interesting. In February, the bank's newly appointed digital asset strategy head, Amy Oldenburg, and this is from Morgan Stanley, said the firm plans to build proprietary Bitcoin custody and trading services in-house with yield and lending services also under exploration. That right there is absolutely interesting, because right now you have to go to these other third-party service providers to get this, but you have Morgan Stanley that's going to be building it in-house. So at some point, I think maybe, these other banking firms are going to start doing the same thing, right? Especially if they want that, like Fidelity with FBTC could potentially do that as well in the future, right? Maybe BlackRock. I can't see BlackRock doing something like this because they're not exactly a bank, but other banks would probably, that want to adopt Bitcoin would probably start following a similar scheme. So we really need to build this out internally. We just can't primarily rent the technology to do this, she said at a Bitcoin conference in Las Vegas. Morgan Stanley, which oversees nearly $9 trillion in client assets, confirmed last September that it would offer Bitcoin, Ethereum, and Solana trading via its E-Trade app. The bank also filed to add an Ethereum ETF to its planned crypto lineup in January, one day after the Bitcoin and Solana registrations. That filing also has yet to be updated since it was last filed. So big news coming out of Morgan Stanley. All right, so keep an eye out. All right, I think this is extremely bullish for Bitcoin as a whole, just Bitcoin as an industry, crypto as an industry. Absolutely. I mean, what more signal could you want, right? What more signal could you want? Yeah, there's still people out there that say Bitcoin is a Ponzi scheme, Bitcoin is a scam. Well, hey, sit there on the sidelines while Bitcoin continues to push up. Bitcoin's been dead about 1,000 times since the start. Since the early 2012s, Bitcoin's been dead, about 1,000 times. So let's see if this time is different, right? And the same goes for, and I hate to bring him up because I know you either love him or hate him, but the same goes for MicroStrategy, right? The same goes for Strategy, Michael Saylor. People are saying he's a scam artist, a Ponzi scheme, blah, 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 blah. But when you have these reputable companies, these reputable institutions, Morgan Stanley, BlackRock, Fidelity, all of these embracing Bitcoin, I mean, what does that tell you, right? They're taking it serious. So anyways, enough of that. We have North Carolina lawmakers proposing state Bitcoin reserve. Here's another one. All right, another big piece of news for Bitcoin. All right, North Carolina wants to have a Bitcoin reserve. So North Carolina lawmakers introduced legislation on Wednesday to create a state-controlled Bitcoin reserve. And this is similar to also Texas as well. We covered them before, that Texas also already has its own Bitcoin reserve. So more and more states could start to adopt this. There's a bunch of states that have legislation already in the works. And this one, it looks like it's pretty much at the finish line. Senate Bill 327, titled the North Carolina Bitcoin Reserve and Investment Act, would allow the Office of the State Treasurer to allocate up to 10% of public funds into Bitcoin as part of the state's long-term financial strategy. The bill, sponsored by the Senators Johnson and Overcash is kind of funny, passed its first Senate reading and was referred to the Rules and Operations Committee. Its stated goals include establishing a strategic Bitcoin reserve, promoting Bitcoin as a financial innovation, and positioning North Carolina as a leader in state-level crypto adoption. This is what I find really cool about how they plan to use this, how they plan to use a Bitcoin treasury, right? This could probably give you guys some ideas if you want to start your own treasury versus just owning it yourself, right? Like maybe you want to partner up with a couple other people. I've actually thought about, I have asked friends and a couple family members if they want to start up an actual treasury. Of course, there's so much nuance to it. You got to get some legal documents signed and all that kind of stuff. But anyways, here's just a piece of this. So use of the reserve would be restricted to severe financial crises, approved investment strategies, funding for critical infrastructure and economic development projects, and support for Bitcoin-related research, education, business incentives. All right. Any liquidation of Bitcoin would require approval from at least 2/3 of both chambers of the General Assembly in North Carolina. This bill allows the reserve to back bonds as an alternative financing tool for public projects. So they're going to buy Bitcoin, issue bonds, and then go do their projects. Again, another bullish signal for Bitcoin, at least Bitcoin adoption. All right. Some other news, for crypto, not specifically for Bitcoin, but Chainlink powers Amundi's $100 million tokenized fund across Ethereum and Stellar. So another bullish signal for Ethereum and Ethereum adoption and, the Ethereum super cycle, the Ethereum story. Europe's largest asset manager, Amundi, is making a decisive move into blockchain finance with the launch of its tokenized fund, SAFO, built alongside Spico. The debut comes back with $100 million in committed AUM, signaling that the institutional confidence in tokenized finance is no longer theoretical, but actively unfolding with regulated European frameworks. All right. So SAFO is structured as a tokenized overnight swap fund that blends traditional finance engineering with blockchain rails. It relies on fully collateralized, total return swaps with top-tier banks to deliver stable yields above risk-free benchmarks. So something like a money market account, right, or a bond, while maintaining liquidity or overnight liquidity, a most important requirement for institutional cash management. The fund runs across Ethereum and Stellar, combining scalability with accessibility. Investors can enter using the euro, the US dollar, the British pound. I don't even know what CHF is. With subscription starting from just 1 unit. This low barrier quietly portrays that a bigger shift where institutional grade products are no longer locked behind high capital thresholds. So another big news coming for crypto, and definitely big news for Ethereum. And this, the thought is out there that the Ethereum super cycle is going to happen. More and more companies, banks, institutions, funds, everyone's moving on to Ethereum rails, right? So again, BMNR has that same exact stigma about it, that it's a Ponzi scheme, it's a scam, and blah, 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 blah. But, I'm bullish on BMNR, and I do expect it, to really outperform once Bitcoin takes off, right? Because then you're going to have the Bitcoin Ethereum ratio. Ethereum should have its own, way up, and I'm bullish on Ethereum, right? Sorry, I had to have a drink. Okay. So anyways, that pretty much ties it all up for our Bitcoin Ethereum segment of this stream. All right, let's see what else we got. All right, this one is related to Supermicro. You guys have heard me in the past say I am not a fan of Supermicro. Never have been a fan of Supermicro. All right, Hindenburg Research, which is a very popular research platform out there. I think all their stuff is free. They basically publish, short reports, right? They've shorted Block, they've shorted SMCI, they shorted a couple other ones out there. But anyways, I remember the Supermicro one really well. And the reason was because, everyone was hyping up SMCI when it was going on this crazy move. And then people were buying at the top, and then it just fell and never recovered, right? SMCI, they fired their C-suite executives at one point, right? In order to, avoid getting in trouble with the NASDAQ and everyone else, and some government officials, et cetera. And then they brought them back on later, right? So I don't like that. They also had one of the top 5 accounting firms leave, stopped doing their books because it did look like they were cooking their books. And then SMCI hired somebody else to finish off or to complete their accounting, right? This was all at the time when they were about to get delisted from the NASDAQ. As a matter of fact, they've been delisted once already, and then they got re-added. So again, I don't like Supermicro's C-suite of executives. I think they're extremely, I don't know. I don't know the word to describe them. Supermicro, the company, Supermicro, the hardware, Supermicro, the computer hardware is actually really phenomenal. But it's just those people that are running the company that probably need to get removed. So anyways, that all leads to this, right? And I'm glad that I've been super bearish on Supermicro for as long as I have been. U.S. charges 3 people tied to Supermicro Computer with conspiring to divert AI tech to China. All right. You guys know what export controls are. We kind of covered them before, especially, like NVIDIA has export controls. They can't just, ship chips to China. The export controls exist so we don't send our best technology to our rivals, right? Or to, other militaries that could be used against us. That's basically what the export controls are used for. So anyways, 3 people associated with AI optimized server maker Supermicro Computers, including its co-founder, were charged with conspiring to unlawfully divert U.S. artificial intelligence technology to China, the U.S. Justice Department said on Thursday. The FBI, and I'm not going to even say their names because I'm going to butcher them, but the FBI said Liu, Chang, and Sun allegedly conspired to sell billions of dollars worth of servers integrating sensitive controlled graphic processing units to buyers in China in violation of U.S. export control laws. Many high-performance AI compute servers are made with NVIDIA chips, which some are subject to export controls. We know the Blackwells, the Vera Rubins, the H200s are the chips that are allowed to go to China. But, NVIDIA did say that they were willing to, create a watered down version of the Blackwell so they could sell it to China. I haven't heard or seen any updates on that news. All right. So anyways, the DOJ indictment was unsealed on Thursday in Manhattan federal court. The DOJ said Liu, a U.S. citizen, and Sun, a citizen of Taiwan, were arrested on Thursday, while Chang, a citizen of Taiwan, remains a fugitive. Together, the defendants and others conspired to systematically divert U.S. manufacturing servers or U.S. manufactured servers with certain GPUs to China without a license to do so from the Department of Commerce. All right, the DOJ said. So Liu, I'm butchering his name, is a co-founder, board member, and senior vice president of business development of a publicly traded U.S.-based manufacturing that designs and builds high-performance computer servers for artificial intelligence, cloud computing applications, including servers that integrate, right? That's basically what SMCI is. Chang was a sales manager in the Taiwan office of Supermicro Computer, while Sun was a contractor. All right, so this is a big deal. I'm pretty sure. I don't know. I'm happy this happened, right? I'm definitely happy something like this happened because that's just one step closer to getting rid of some of those very questionable C-suite executives, and then hopefully just getting Supermicro back on track and getting that stigma away from them not only cooking the books, cooking the accounting books, but also getting rid of the C-suite executives that are obviously not doing the right thing. So anyways, that's my big point. And another point to all of this, right? Another point to all of this, the U.S. Let me back up. I have said several times when it comes to NVIDIA, that NVIDIA is the center. NVIDIA is the center of this whole AI trade. And there's article after article after article of FUD saying, oh, China doesn't need NVIDIA chips. Oh, NVIDIA chips has backdoors. Therefore, China is not going to buy them. Or China, has developed its own NVIDIA chips, right? Its own, NVIDIA copycat chips, right? They don't need NVIDIA. Well, why do we have one of the biggest, server manufacturers out there exporting GPUs to China? Why is China still interested in all of these, NVIDIA chips, right? Specifically the best of the best, the Vera Rubins or the Blackwells, right? So again, I don't buy that FUD for a second. I don't buy the notion or the bull crap that NVIDIA is a dead company. It's not going to do well over this next decade, et cetera, et cetera. Yes, has the share price not cooperated? Are we not seeing that up and to the right that we all like to see? Yes, that is all true, but it doesn't mean that NVIDIA is bad. Okay. It does not mean that the data center story is dead. It doesn't mean the AI thesis is dead either. All right. NVIDIA is just a price. Fundamentally, company's crushing it. As a matter of fact, I still need to watch a GTC. I have not watched it, haven't had the time to watch it. But if you want to get bullish or a reason to get bullish on NVIDIA, you just watch the GTC conference, and I'm sure you'll change your mind about it. So not financial advice, of course. I'm not telling you to go buy NVIDIA or anything like that. Do your own due diligence. Okay, so we're at, let's see, minute 40. I appreciate the 73X viewers and the 27 or 26 viewers on YouTube. So appreciate you guys joining me for this stream. Okay, so we're gonna watch a clip. This is a reaction clip to oil prices and a hawkish Fed. Yesterday, we covered the Federal Reserve, Jerome Powell having his press conference, keeping rates steady, saying that the labor market is in focus along with inflation, and it looks like it's starting to creep back up. So let's listen in on what, let's listen on this clip.
400 points. It's less than 1%. NASDAQ and the S&P are both lower as well as crude oil makes a move here. You almost, Josh, have a two-pronged problem for the market. Not only the move in oil, WTI probably doesn't best represent the jitters in the market just because, Brent today topped 119. And then you have the Fed chair who was more hawkish than not and said inflation's not coming down as much as they, quote, hoped. The odds of a Fed rate hike by June are now higher than the chances for a rate cut. That's the backdrop. That's what you need to know. A hawkish Fed and oil that continues to go up, and stocks as a result are uneasy.
I don't often question the wisdom of the market, but I think in this case, that's crazy. The Fed knows damn well there's nothing it could do with interest rates that would change the price of gasoline at the pump. It's almost an absurd proposition. So I don't believe that to be the case. I understand why the market believes that, just looking at what oil is doing to the inflation numbers, what high gasoline prices are doing. But the knock-on effect to the consumer is actually disinflationary, more so than it is inflationary. It is absolutely causing people to think twice about spending. And I think we're seeing that sentiment everywhere we look. So I don't believe it. The bigger issue for me is the state of the financials. They look absolutely horrible. The 2-year is up the most on the curve right now.
Sure. 385 was what it hit earlier today. We can look at it as Josh is talking. I didn't mean to interrupt, but just to give context to that, yields are definitely up, especially on the short end, on the back of what Powell had to say yesterday and where the Fed seems to be positioning.
Yeah, no, Judge, it's the right interruption because that's really the most important thing. This is the highest we've seen the 2-year since August of 2025. And in the meanwhile, it almost feels like there's nowhere to hide the last couple of days. Gold just broke down below its 50-day moving average. Metals and mining on the whole are the stocks themselves are negative. The materials are down 2%. We've lost the home builders because mortgage rates are not coming down at the rate that we had hoped earlier this year. And now you've got 26% of the S&P 500 below the 50-day, which is the lowest reading since Liberation Day almost a year ago. That is a 2 standard deviation below the mean, and it's problematic. 52-week lows on the NYSE are now at 5%. That's the highest since November. So it's a risk-off tape, and we've lost a lot of the areas that we were using as sort of like all right, here's a little bit of a hedge, or here's a little bit of a non-correlated asset. People are just right now looking at a lot of these developments, looking at the bond market, looking at oil, and just saying, you know what? I don't need to figure out the next thing I want to invest in right away. Let me move some cash to the sidelines.
Janet.
And honestly, that's been my take this entire time. Like, we've been chopping up and down like crazy over these last couple of months. So now I'm in this like mode, me personally, I'm in this mode where I'm just keeping cash on the sidelines, dry powder, whatever. I still expect the market to, turn south, again, get that dip of, 15%. I'm still looking at some ETFs that I want to open positions on, but I'm waiting for that big one. I'm waiting for that big catalyst, whatever that catalyst is, that's going to send the markets just nosediving. Now there is also the scenario where it's just a grind lower scenario, right? We're just going to continue lowering. Right now, the S&P 500, I think it's down like about 2.5% year to date. And maybe that's the scenario that happens. We just grind lower. We have these little rallies, these little relief rallies. We go up, we think things are getting better, and then we just sell off, right? I think we're just going to grind lower as well, right? There is a case for that as well. We may not have that V-shaped rally that we had in April. That was completely policy driven, right? People have to know that that V-shaped rally we had back in April was just words from the president. It had nothing to do with, you know, earnings not doing well, or it had nothing to do with companies being bad or any of that stuff, right? Or the United States entering a recession. It had nothing to do with that. It had all just to do with policy, right? And the market is, of course, forward-looking, so they're trying to price all this in, so they sell everything off, right? But then, you know, Trump came back and said, "Oh no, we're going to hold everything off for 90 days," and the market just went parabolic after that, right? I think it was up 9% in a single day. The S&P 500 never moves 9% in a single day. So we saw that happen. But this year, it feels like it's going to be just a grind lower scenario, and then maybe a grind higher towards the end of the year, right? Maybe the second half or the quarter four is when we'll start to see, you know, the market start to rebound from the lows. Who knows, right? No crystal ball here. I'm just trying to connect some dots for myself personally, but I am keeping a ton of dry powder on the sidelines. I'm not rushing into anything. The only thing I really have been buying has been, you know, Bitcoin, BMNR purchases here and there. I might do a swing trade, but you know, it's a very small swing trade. Anyways, let's continue listening in on this.
It's, you know, the stats continue along the lines of what Josh was talking about. This was as of yesterday, less than 30% of the S&P stocks are above their 50-day. It's the lowest since April of 25. So go back to Liberation Day, to when the market really got upset, and you had a number of stocks below their 50-day. So we're not looking great under the surface. Metals, gold is worst week since 83. And Jonathan Krinsky at BTIG says, buckle up, that the 200-day moving average of the S&P 500, which is 66.15, looks unlikely to hold. We're below it now, okay? So it's unlikely to hold. He thinks a move towards 6,000 has a decent probability. That barring a close back above 6,900, so that's, you know, a few hundred points higher from here, that the bears maintain the upper hand.
Well, I think one of the reasons that we saw this broadening out, particularly since August of last year, was this expectation of accelerating economic momentum. Part of that explanation was a continued accommodative monetary environment, not just here, but also outside of the United States as well. Josh already pointed to disinflationary trends. And then there was also this expectation of improving margins due to the implementation of AI. At this point, several layers of that value proposition, if you will, in terms of the momentum of the equity market have been upset. We're not looking at potentially as much accommodation. We're actually looking at potentially more restrictive. We're already seeing some tightening financial conditions, not just from yield, Scott, but from some of the carryover from what's happening in the private credit market. And then you look at the state of where to hide. I mean, with energy being the only sector that's positive this month, most investors are underexposed to the energy market based on its percentage in the S&P 500. And so where do you hide in this environment? You still have this bit of this hangover from the AI disintermediation obsolescence argument. Now you get potential challenges in the Middle East. And if you're sitting in cash, you know, cash yields look, kind of attractive right now, especially if they're not going to be moving lower. And so if you're wanting to put money into a market that perhaps is reflecting more attractive valuations, you're feeling like maybe you have a little bit of time to do that, given where yields are.
You got a choice of what.
Yeah, I personally don't have any money in like SGov or anything like that, or any like money market accounts or anything like that. But I mean, that's also a good point. If you're gonna sit on a bunch of dry powder, just have it sitting in an account that's, you know, giving you some type of interest that's doing better than a majority of the market, right? Especially if you're not trading or anything like that. So I mean, that's a solid point in my opinion.
You know, Malcolm, wherever you want to go, because we've covered sort of everything that's moving around. Dubravko Lakos over at JP Morgan's cut his S&P target to 7,200 from 75, just to, you know, represent where sort of the risk factors are now and where sentiment seems to be, and that the market in his mind is continuing to price in a short term, a quick end to what's happening in the Middle East. And he's not so sure, nor are, you know, other investors too. How do you see it?
I think those two things run together. I think you made a really good point about the 50-day moving average when you harken back to Liberation Day, but the 200-day moving average, which we've now fallen below, we haven't seen us breach that level since May of 2025, which was sort of the backswing from Liberation Day. And so I think that's meaningful here too, because it shows just how much pessimism has just kind of come into the markets all of a sudden. I think it's also a little bit disappointing to the point that Shan's making about where we are, because earnings were actually really strong in the first quarter. We blew out expectations by a wide margin for the majority of stocks that reported. And I think that's disappointing moving into a market that now is being uprooted by oil shock concerns. We're being uprooted by now private credit concerns that already existed. Now there's even real conversation happening, whether Josh likes it or not, about interest rate moves upward instead of downward. Like, that's all meaningful for a market that was coming into the year celebrating how strong things look from a fundamental perspective.
Hey, I mean, the kind of market we're in right now, look at Micron. You need you a better example than Micron?
So look at that 10-year treasury. It was just below 4% not too long ago, right? And now it's back above, sitting at 4.25, right? The 10-year treasury is a very important indicator for a lot of things. It's specifically for debt markets, but also for commercial real estate. So that going back up, one of Trump's biggest things, that he ran on was trying to bring that rate down, bring interest rates down. So it looks like it spiked back up, all because of what's been going on with oil. And just to bring up, just a quick point here, some news I just came across. But yeah, just in, this coming from Disclosed TV, Saudi oil officials fear oil prices could rise above $180 a barrel per the Wall Street Journal. Right. So that just came out. So if Saudi Arabia is voicing their concern, that is not good. Right. That is definitely not good for the energy markets. So let's finish off this clip, and then we'll watch something next.
Today, which had a blowout quarter. There's no other way to say it. Now, the chart's been a blowout for the last several months, so maybe that has more to do with this than anything else. But they had a blowout quarter, and the stock is down. So in this kind of tape,
similar to NVIDIA
exactly.
a couple weeks back.
This is in a huge high flyer, and the stock's down 5% on what I said was a blowout quarter by any estimation.
Yeah.
Micron tripled their revenues, right? They had a great earnings, but again, market sold them off, right? Market does not care right now about earnings. They care about market sentiment. They care about what's happening with energy, with oil, and the impacts of that on the globe.
So I alluded to the financials for a reason. I think that structurally they were extremely important to the bull market that we experienced in 2025. And I think from a sentiment standpoint, we can't afford to lose them to the extent that we are. They're not as big as tech, they're not as big as consumer discretionary. But when investors think about the lack of follow through from the financials, it just makes them second guess all of the other rallies that we have been seeing. And now that lagging performance has actually turned into detracting performance. These stocks are very important. Capital One Financial is down 26% year to date. That very rarely happens outside a much bigger disturbance in the financial system. Wells Fargo is in a 20% bear market, Prudential not far behind. The breadth of poor performance in the financials is 100% creating a psychology problem amongst the bulls. Out of 70 financial stocks that are in the S&P 500, literally only 5 of them are up this year. Only 5. And they're not necessarily the 5 that you want to see. CME and CBOE, which are two companies that thrive on market volatility. Interactive Brokers up 5%, and you've got CB and Travelers, and that's it. All of the other financials are in the red, and many of them substantially so. How do we get a bull market going with these companies so deep in the hole?
All right, so there we got it. So one interesting chart I want to share with you guys. We haven't checked this in a long time, but this is coming from the ICI. This is the money market funds report, right? So total money market fund assets increased by $38 billion to $7.86 trillion for the week ending March 18th. All right, the Investment Company Institute reported. So there is currently $7.86 trillion sitting on the sidelines in money market accounts, waiting for something, right? Waiting for something. And this number has climbed dramatically over the last year, definitely since a little bit before Liberation Day, right? April 4 or April 8th, whatever it was, right? So this number has been steadily climbing. We started to see sometime in, I believe it was like November, October, that it was coming down. People were starting to deploy money, and then people got cautious again and started holding and putting money in money market accounts, right? So the reason why this is so important is this is, an investor indicator, right? Investor sentiment. This is people fearful of the stock market, and they're putting money on the sidelines, waiting for that big one to happen, right? That big crash, whatever it is. But also, all of last year, there was this idea that all of these, fund managers, all of these people, these family offices, people who handle money for everybody else and do their investing for them, basically, that there was this thought that they had missed that April Liberation Day run up, right? Right after it was announced, we had that huge crash and then a huge run up, right? And people had missed that. So this money was stuck on the sidelines. and they couldn't, they were continuing to wait for this, for this uncertainty to clear up, because you didn't know if the tariffs were going to create inflation, if it was going to get, run rampant, was the Federal Reserve going to increase rates, et cetera, blah, blah, blah. And the money just sat there, right? And we see that this is starting to climb even higher here in 2026, right? People are still holding a lot of cash, a lot of dry powder. And this is just, another indicator for investors to look at, right? I like to check this out at least, whenever I remember to check it out, right? But seeing this increase again, I saw it down at like 7.3 trillion. Again, 7.3 trillion in money market accounts. That's a big deal. That's a lot of money that's just sitting on the sidelines. All right. So, anyways, speaking of Micron, let's listen to this 4-minute clip from Micron. All right. This is Micron CEO, and this is a play on the whole AI story, right? And memory demand, and why Micron, SK Hynix are pretty much the darlings right now, because these are the only companies that produce, well, them and Samsung are the only ones that produce the memory needed for AMD and for NVIDIA. And that's why their stock price has been doing so well. They pretty much have all of their future orders already paid for. They just can't produce it fast enough. I think Micron is building a new plant, a new production plant somewhere in the United States. I forget what state, but they are building a new plant. So that should come online in the next probably year and a half or so. So anyways, let's listen in on what Jim Cramer is talking about with the CEO.
Well, I got to tell you, they've been on fire, up more than 320% from a year ago. Stocks pulling back minor today, despite results that handily beat Wall Street estimates, and the pullback should not be a determinant of your thinking about the situation. That's why I'm so glad to have Sanjay Mehrotra, who's Micron CEO of First Point CNBC. Sanjay, thank you for being such a good teacher. Congratulations, because you basically taught us that we are so far, so early, because of what's going on with agentics and AI, that we shouldn't make a judgment that this time we are about to roll over. It's too early to think like that.
First of all, Jim, great to be back on your show. You're absolutely correct. AI is in very early innings. You just saw at GTC how much advances are being made in AI. And memory is a strategic asset. You need more memory, you need higher performance memory in order for AI to be able to deliver its full capabilities. This is inference inflection. As inference broadens, it will scale up the need for tokens. Those tokens need to be fast. And guess what? You need more memory. You need fast memory in order to deliver the full potential of memory. And memory today is very tight supply. And supply cannot be brought up that easily. And you are seeing that in our results. You are seeing the value of memory reflected in our strong financial performance in Q2. By the way, our Q2 was a $10 billion increase from our fiscal Q1. Our fiscal Q3 guidance is another $10 billion increase, nearly $10 billion increase in revenue. And that puts us at midpoint of our guidance at about $33.5 billion. If you look at S&P 500 tech companies, Micron is among the top 10. Micron is the invisible layer powering AI today, and that's reflecting in our strong performance and strong outlook as well.
Well, we should distinguish the Micron that is high bandwidth memory, Micron that is NAND, Micron that is DRAM. And it's clear, Sanjay, that you're struggling yourself with limited number of dollars versus the amount of money you have to spend to be able to meet the demand. How are you prioritizing? Because holy cow, what you choose to prioritize is going to impact what everybody else in the world is doing.
Jim, memory supply is tight across the end market segments. Of course, HBM is in tight supply, and non-HBM DRAM is in tight supply, along with NAND. They're all in tight supply. We have tightness across all our end market segments. We are only able to supply for our key customers.
Only able to supply for their key customers, and their key customers, one of their big ones, obviously, is NVIDIA. I mean, what's not to like about Micron right now? And he's talking about how supply constrained they are. And I mean, if you're an investor in Micron, I'm sure you're very, very happy, right? I'm sure you're very happy. Me, myself, I'm not going to be getting into Micron. I not for a long-term hold. I might try to swing trade it. I think I just missed the dip, though, that just happened. But I would probably swing trade this for me personally, just to do something, I guess. But yeah, anyways, so let's continue listening in. I mean, this just continues to play on the whole story of AI CapEx spend, right? All these hyperscalers spending $600 billion. You know, where's that money going? It's going to companies like SMCI. It's going to companies like NVIDIA, Cisco. It's going to companies that deal with, copper. It's going to, power. It's going to power companies because you got to build out these data centers, and it's going to memory companies that have a play in order for NVIDIA to produce the semiconductors, right? Produce their GPUs. So again, when you look at this story, you got to look at it in second, third, fourth, fifth derivatives, as Dan Ives says, right? So you have the data center, and then what goes into the data center, and then you look a layer below that, what AI, what software, what infrastructure, what hardware, all the way down to the power, and then all the way, if you want to go even further than that, all the metals that it makes up to make up all of these semiconductors, right? I didn't know that. Was it helium? If someone could mention it in the chat, I think it was helium that's actually used in the manufacturing process for semiconductors, and that's being supply constrained right now because of the tensions in the Middle East. I would never have thought of that, right? So that's probably why some semiconductor companies are having problems right now. But again, like knowing that type of stuff and how the energy also impacts other sectors, I mean, this is why we have to follow geopolitics, right? But anyways, let's finish this off.
The midterm, about 50% to 2/3 of their requirements. We are continuing to work hard to bring up supply, but bringing up supply is a very long lead item because DRAM needs new capacity. New capacity takes new construction. Construction is long lead time item. So earliest that we see in the industry, meaningful ramp starting to happen, and it will gradually happen over time, is starting in 2028 timeframe. So I do not see supply catching up to demand for considerable period of time here. Of course, this is a period of heavy allocation. Micron has a very strong technology and product portfolio, and we continue to optimize the mix of our business. Today, non-HBM DRAM has actually higher profitability than HBM. NAND has strong profitability as well. So we are managing the mix of the business, keeping in mind long-term considerations, and absolutely data center is the biggest growth driver. We are well positioned with our product portfolio, including HBM, to address.
There we go. You heard it from the CEO himself. All right. So we're pretty much at the top of the hour. I'm not going to cover this other stuff. I think you guys kind of already get the gist of why gold and silver are falling off. Some other big news was that Trump and Takashi, the Japanese prime minister, if I'm not mistaken, announced a $40 billion GE Vernova Hitachi reactor project. This was also big news. Trump was he did a live at the White House. He went live for the gram. No, but there was a huge press conference at the White House, and they were discussing a project, and this was that project. Okay, so President Trump and Japanese Prime Minister Takashi are set to announce a $40 billion nuclear power project in Tennessee, where GE Vernova, ticker GEV, and Hitachi will build the BWRX 300 small modular nuclear reactor. All right, Bloomberg reported Thursday. Specific details, including when the reactors would be operational, are not yet clear. The Trump administration believes small modular reactors would help boost U.S. industrial growth by adding power that can be generated on demand. Right, so that modular reactor, the nuclear reactor, we're all hearing that stuff starting to come up again. Last year, I believe Trump had mentioned, the need for power. Obviously, you had Sam Altman, Lisa Su, you had Microsoft in the mix, and everyone's talking about how they need power in order to power this, in order to power the next industrial revolution, right? Which is going to be AI driven, right? You need power. And then there was the whole talk of the American stack, et cetera, right? So nuclear power is going to be on the agenda for this year. All right. Me personally, the way I'm playing this nuclear power play is I just bought a uranium mining ETF from Sprott ETFs. That's just how I'm doing it. I don't want to pick and choose the single individual uranium miners. This is probably going to be easily a 5-year thing, right? It's going to be 5 years before you really see anything come from this. There's some other companies out there, companies like Oklo, ticker OKLO, that has a huge community around it. They were almost a meme stock last year. I mean, their stock price was going crazy, and as far as I know, they weren't really producing anything. They had nothing. They had no nuclear reactors. They had nothing really going for them. But the stock was just going crazy last year. But hey, how's it doing this year? I mean, let's take a quick look because I want to cover something else here. Oklo stock. Let's see how this is doing. So yeah, Oklo stock. Yeah, year to date, down almost 30% for the year. Yep, you see that meme mania. And then, it hit October, and that's pretty much when everything sold off, right? So this was a company, had a huge community, a lot of hype around it. It was going to be in the, in part of the Trump administration's push for nuclear power. They were talking, modular nuclear reactors, all this stuff, but they had nothing. They had nothing. I think if you Googled their headquarter address, it was like this small little like building, not even a building. It looked like a shack. And it just looked weird. I never put any money into Oklo, but there is a strong community around Oklo. I don't even know. I don't hear about it as much these days. But yes, this is a big deal. Speaking of power, because I think we should cover this real briefly. This is over the last 5 days. Everything is selling off and buying power. All right. XLE energy. Over the last month, we see that power has been the best performing sector. Right. And then year to date, we see that power is up 30%. XLE is up 30%. Right. So if you want, again, something to play on energy and the data center, the data center story, energy is definitely going to be needed. And there's still the thought out there of the power grid upgrade, right? The power grid upgrade that's going to happen, electrification, all that stuff, right, is going to happen. And ETFs like XLE could benefit, especially the companies in there. You're going to have all the power companies, all the utility companies, energy companies, etc. So something to keep an eye on. And let's see what else we had. Let's see. Not going to cover this. Yeah, I mean, you guys pretty much get the gist of it, so I'm not going to cover that. OpenAI is going to create a super app, a desktop super app. It's going to start competing with or was it OpenClaw or whatever, ClaudeBot. It's also going to be competing with NVIDIA's version. That seems to be the next iteration of AI upgrades that's coming. Is going to be local native AI on desktops. As a matter of fact, MacBooks in China are getting bought up like crazy because people are putting these AI agent softwares on them in order to run their own small businesses, or at least have an assistant. Again, this is going to be the next wave, right? And this is why people seem to be getting laid off, right? This is that iteration as part of this new industrial revolution that's happening. Just my thoughts about it as well. I haven't even touched any of this, like ClaudeBot or whatever it is, or OpenClaw. I haven't touched it. I do want to play around with it. I have been thinking about checking out NVIDIA's as well, because some people are building a lot of cool things. If you guys follow X, Unusual Whales, they have basically a Bloomberg terminal copy clone that they built out using OpenClaw, if I'm not mistaken. And there's also all these other smaller firms that are coming out, or these smaller companies, whatever, coming out with their own, Bloomberg terminal style softwares. You spend $20 a month or something, because to be on a Bloomberg terminal, I think it's like it's like a $10,000 or $20,000 a month subscription. Like you don't just get access to something like that. So definitely something to keep an eye out, especially if you want to look for something to experiment for any of you tech heads out there. Meta actually was going to close down their metaverse, and then they had an uproar of people that were not happy. Some people spent upwards of $500,000 for digital real estate in the metaverse, and fans were speaking up and saying you better not close it down. So they're actually going to keep it open for now. But Meta spent upwards of $80 billion on this metaverse gamble, and honestly, it's not going to pan out, at least in my mind. I don't know. Have you guys ever been in the metaverse? Have you bought the goggles or whatever and started walking around some of these places? I have not. I don't know anyone that has. And not only that, it's like, I mean, who's buying this stuff, right? Who's really buying this stuff? And there was somebody that spent a ton of money to have a piece of digital real estate next to Snoop Dogg. I mean, this is worse than the NFT craze, in my opinion, is all. Let's see that. So I see, let's see. Oh my God. Yes, I'm reading your chat, Sergio. Let's see. Going back to PM Takachi, she also mentioned she is bringing her Honda F1 cars to DC and cherry blossoms. I didn't get a chance to watch the entire press conference or whatever. I definitely got to go back and watch that. She won as Japan's prime minister race, I guess. She actually won. So I mean, she's loved by the country for now. Let's see what else. Palantir CEO was at the US-Japan dinner. Alex was sitting right next to the podium. I still have not seen AIPCon I did see Alex Karp's intro into AIPCon. I haven't watched the AIPCon video yet. Let's see. U.S. Fed government considering to open classified data to AI. Who is there in line? Grok and OpenAI. Well, Anthropic is fighting tooth and nail to get those contracts back. We'll see if OpenAI is able to snatch it and keep it. Yeah, I didn't see that article. Definitely didn't. Yeah, they had metaverse concerts as well. Yep. Yeah, I still also have to catch up on the NVIDIA GTC. Man, I just don't have the time in the day. Like as soon as I'm done here, I gotta get out of here. Like I gotta be away from the desk. So I gotta optimize my time. Whenever I do like my little nature walks, walk up and down just to at least get some type of freaking health in, some healthy habits done. That's usually when I'm listening to like a audiobook or a podcast or something. For GTC, I'm trying to sit at the desk so I could actually watch the presentation. But as soon as I'm done here, I'm not at the desk anymore. So maybe I'll really have to carve out that time. There was another little quick article speaking about Palantir. Palantir is in the spotlight as Mizu reiterates outperform after they had an executive meeting. All right, so Palantir's outperform rating for Mizu Securities, they're placing them at $195 price target. We recently hosted meetings with Peter Simback, independent advisor to the Palantir CFO and former VP of Experience Innovation at Aramark, a Palantir customer. Along with current Palantir customer in the architectural, engineering, and construction vertical, analyst Greg Moskowitz wrote in a note to clients, during our discussions, the executives highlighted compelling deployment use cases, Palantir's differentiated bespoke approach to enterprise transformation, and the absence of any comparative alternative. So translation, Palantir has no competitors. All right. They have such a great moat. They are value driven. They actually, you hear Alex Karp always say that Palantir, they want to showcase the value that they could bring before a contract is signed, right? They want to prove that they are valuable, and they are winning contracts, not just from the government, but from the commercial side as well. So I'm still very bullish on Palantir myself. I don't own any Palantir common stock. Instead, I own, the Round Hill version, which is the weekly pay. Speaking of, high yield ETFs, we're going to circle back to that. But anyways, we reiterate our view that Palantir is in a category of one, delivering total revenue growth, acceleration, and margin expansion at scale that is unlike anything else in software. We also remain bullish on a surging U.S. commercial business fueled by rising enterprise adoption of AIP and growing urgency around operationalization, or whatever. You guys know what I'm trying to say. And more broadly, we remain steadfast in our view that Palantir is increasingly well-positioned to benefit from long-term trends in AI, government digital transformation, and industrial modernization. So I am bullish as hell on Palantir. I am considering actually buying common stock because that is how much I really, really like this damn company. I am actually considering opening or just buying a lump sum of Palantir common stock just so I could say that I am actually a Palantir shareholder. I am so bullish on this damn company. I can't even state how much, but anyways. So getting back to the high yield ETF stuff, because I do want to at least bring this up. So we like to say ETFs are good, right? We like to say that they're the best. They're doing so well, yada yada yada. You guys know what I'm talking about. But they're doing well in the moment, right? They're doing well as long as the trend is doing well for whatever the underlier is, whether it's NVIDIA, Tesla, Palantir, or what have you, right? Over this last year, everybody loved Chippy. Everyone loves Chippy, right? Chippy is the best ETF out of YieldMax. Chippy is the greatest, et cetera, et cetera, et cetera. People not fully comprehending what the underliers are, okay? And the underliers are semiconductor companies. If you want to know how Chippy could perform potentially, right, either look at the underliers, or if you want just a quicker, faster way of doing that, all you have to do is look at SMH, all right, or SOX, right? SOX is another one. Or is it SOXQ? I always get those mixed up. But anyways, you can just look at SMH, right? and I might have the pitchforks come after me for mentioning this, but Chippy is eventually going to not have its day in the sun because the semiconductors, if this trend continues, if the trend breaks, right, this is really what's holding up some of the market right now, holding up the S&P, companies like, or the broader market. This is really it, is the semiconductors. If this trend breaks and if SMH continues to free fall, Chippy is going to get absolutely wrecked. Okay. And I've said this before, and it's because of the distributions, the weekly distributions that it constantly pays out in a grind lower scenario, that spans months and months and months. With weekly distributions, that's going to be very, very bad, right? Because you're taking money out of the NAV in order to pay this distribution. So that share price is going to get demolished. All right. So it may not happen now. I'm not saying sell Chippy for anything. All right. I'm not saying sell out of Chippy. I'm just saying for those who don't fully understand what this ETF is and what it does, et cetera, all that good stuff. Just understand you have to track the underliers. The underliers are super important because that is really telling you the story of what's going to happen with Chippy if something happens, right? If we enter a bear market of some sort. Right now, the S&P 500, like I said, year to date, what is it? I think it's down like 2% or something. Oh no, it's actually down. Yeah, it's actually down 3.5%. So we have like another probably 7% to go before we enter correction territory. Right, 10% is usually a correction. But if we continue grinding lower than that, then that's when you hit, the bear market. Right, that's when you hit a real bear market. So just be wary out, just be careful out there. Don't think that Chippy is always going to go up and to the right and that it's always going to pay this amazing 45% distribution yield. All right. Have your expectations about this product. All right. Have your expectations set that, something could potentially happen in the future, especially if the semiconductor sector is hit, that this ETF, the distributions could change. And obviously the share price is going to reflect what's happening to the broader market. So I just want to share that because, again, there's still a lot of thought out there that, oh, Chippy's invincible. It's always going to go up and to the right. It's doing so well. And people, again, not everybody, and I'm not trying to bash anybody, but, this is for more so for the new investors who are buying Chippy because, they're seeing other YouTube videos about it. And they think it's always going to pay out this 45% distribution yield, right? It might work for the first couple of weeks, but as you guys have seen in the past, once the market takes a turn, all these ETFs start to suck, right? All of these ETFs are bad. And then everyone starts flocking to the safer ETFs, things like NEOs, things like, index backed or index based, cover call funds or whatever ETFs are out there now that have tons of, these very fancy strategies in them. So I just want to point that out. All right. I felt the need that I had to point that out. Okay. So everybody, we are at we're at the top of the hour 17 minutes. I will be here for the next couple of minutes in case anyone wants to come on and, talk some nonsense. So I'm going to post this in the chat. Of course, you don't have to come on, but if you do decide to come on, please keep it PG. And I'm here in case anyone wants to cut it up in the chat. All right. So just want to take a look at futures one more time while we wait. So futures looks like we're going down. Yeah. This was at 23, 26. So, it's overnight. So anything can really happen in overnight. So we'll really see what happens as we run up. But I don't see any new news coming out. No new catalysts. All right. Let's see what energy is looking like. Yeah. Yep. Coffee is getting more expensive. So for any coffee drinkers out there, that's the other thing about energy, right? That's the other thing about energy. Things like propane also start to get expensive, at least here in Southeast Asia. In America, not so much. You can have like electric stoves, or you can have, the gas. But here in Southeast Asia, a lot of people buy a standalone like 2-burner or 4-burner, but you have to have like a propane tank attached to it, right? They don't, in most houses, apartments, they won't really have the burners, right? Or whatever. So propane is also getting more expensive. So it's getting more expensive to cook food, right? So again, when energy starts to go up, it impacts so many different facets of life. So things you didn't think about, right? Things you would never have thought about. It can start to impact you. So let's see what else we got here. Yep, 10-year notes. So these are the bonds. Man, that's nasty. That is so nasty for the 10-year. That is so upsetting. Just when you think real estate is going to finally get its breakout, the 10-year spikes back up. And, you know, for a little bit of humor here, all right, the candle, the moment the order fills. Let's see if I get in trouble with the gods. Yep. That's how it be sometimes, man. That's how it be. All right, ladies and gentlemen, I think that's going to do it for me. I appreciate the 83 viewers on X, all right, or 81, whatever is more accurate number. I appreciate you guys joining me in the stream, and I appreciate the 29 to 30 viewers on YouTube. Thank you guys for joining me, all right? I hope you guys enjoyed the stream. Hope you got a little bit of value from it. Hope you got some entertainment from it. As always, I appreciate your support. If you guys would kindly hit that like and follow if you did enjoy the stream, all right? It lets me know that the stream is actually entertaining or at least a little bit valuable. So with that being said, guys, I will see you in the next stream. You guys have a wonderful day, wonderful night, wonderful evening, wherever you are in the world. And I will see you guys in the next one. Take care.